The Windsor-Essex County Association of Realtors reported 476 residential sales in June, down from 501 during the same month last year. The average sale price also slipped, landing at $566,103 compared to $582,913 in June of 2025, a drop of nearly $17,000. Zooming out to the full year so far, 2,313 homes have sold across the region through the first half of 2026, down from 2,430 over the same stretch in 2025. In fact, every single month this year has come in below its 2025 counterpart. The year-to-date average price sits at $557,567, down about 2.5% from $572,179 a year earlier. WECAR says the slowdown isn't tied to one single cause, but rather a combination of pressures weighing on local buyers: affordability, interest rates, and broader economic uncertainty tied to the region's auto-dependent job market. Given how much of the local economy is connected to the auto sector, ongoing concerns have added another layer of hesitation for would-be buyers. They also noted that borrowing costs have actually improved recently, with interest rates moving closer to historical norms. Still, uncertainty around jobs and the wider economy continues to shape both pricing and buyer confidence. Despite the overall softening, WeCare says the picture looks very different depending on price point. They describe the local market has effectively split into three distinct tiers. Homes priced around $400,000 or under are still firmly in seller's territory, while the $400,000 to $600,000 range has shifted into more balanced conditions. At the higher end, buyers eyeing homes closer to the $1 million mark now have considerably more options, and with that, more negotiating power. That $420,000 to $699,000 range was in fact the busiest segment of the market in June, accounting for 245 of the month's 476 total sales. As of the report, 2,241 properties were listed for sale across the region. June also saw 1,318 new listings hit the market, slightly down from 1,354 the year before. But since new listings fell more slowly than sales did, buyers are still left with a somewhat wider pool to choose from. Here's the bigger picture. Even with the sales and prices down from last year, WeCare pushed back on the idea that the market is struggling. They pointed to the everyday realities: job changes, growing families, downsizing, that keeps driving people to buy and sell regardless of broader market conditions, adding that there's always a reason for folks to move. So what should you actually do? If you're a buyer, this is a window worth paying attention to, especially if you're eyeing anything above the $600,000 mark. With inventory running high on the upper end of the market, you have more selection and more room to negotiate than buyers have had in recent years. If you're currently in a starter or mid-range home and considering a move-up, conditions right now favor exactly that kind of move. If you're a seller, realistic pricing is the single biggest factor in your outcome. Homes priced using current market data are still closing close to asking, while those priced on peak era expectations from a few years ago are more likely to sell for less than hoped for. Work with a realtor who can show you what's actually selling in your specific price bracket and neighborhood, and price accordingly from day one rather than testing the market high. If you're an investor, I can tell you that some of the best opportunities often appear when the market feels uncertain. While others are waiting on the sidelines, experienced investors are focusing on the numbers, looking for long-term value and buying properties that make financial sense, not simply chasing market appreciation. A softer market with rising inventory, especially at higher price points, can create opportunities before conditions fully shift. Focus on the fundamentals. Uncertainty in the auto sector may be affecting buyer confidence in this region, but that does not necessarily mean the impact will be long-term. The strongest activity remains in the $420,000 to $699,000 range, which gives us a good indication of where demand is still holding up. Run your numbers using today's interest rates, property values, rents, and expenses, not the peak market assumptions from a few years ago. Look for properties where the underlying value still makes sense, even if the market moves up or down in the short term. Whether you're buying, selling, or investing, the Windsor-Essex market isn't standing still. It's simply rewarding those who understand exactly which of its three markets they're operating in. This is Rasha Ingratta, mortgage agent level 2 with Mortgage Intelligence in Windsor, Ontario since 1999. Have a wonderful day.